I didn't think I'd ever actually have to ask this, but are we having an OPEC meeting today? What can you tell us from the sources you speak to? Is it going to happen in a couple of hours?
Hi, Manus. Good morning. Shockingly, we don't know. I've heard from government officials who ought to know that we are having a meeting tomorrow. Some very plugged-in OPEC watchers on Twitter have said we are having a meeting tomorrow, but others have said we're not. And so it's hard to tell. I guess this confusion is only possible because it's a virtual meeting. You and I aren't meeting in Vienna as usual, so I suppose they could log on at short notice. But whether it's now or next week, I think there's a consensus, at least, to extend the current cuts, to avoid the tapering of the cuts that would otherwise take place. And so that means Russia and Saudi Arabia are aligned there. But what's taking longer and what might delay the meeting beyond tomorrow is the need to negotiate something new, a compliance mechanism, something formal that sort of drags Iraq, especially, and also Nigeria, into better compliance. So I am hearing that those talks are going pretty well. There's a new Iraqi acting minister, Minister Alawi, the finance minister. He's new, learning the ropes. They're giving him cutting him some slack. So, but the talks are going well. So I think we're going to get an extension with some compliance mechanism, but maybe not tomorrow.
Bob, let's flesh out the story around these laggards, because it's not the first time that they're laggards, and every cycle and every few months there's a different reason why it's okay for them to underperform. Clearly, Saudi Arabia and Russia are running out of patience. This new framework, this new approach to enforcing compliance, what do you make of it?
Well, you know, it stems from something we've kind of forgotten a little bit in the discussion, and that OPEC has agreed to a 2-year deal here. And while they are relieved at the sharp recovery in crude prices and the accelerated shut-ins in North America, I don't detect any confidence they're out of the woods. The reopenings have yet to be proven successful. So the way they look at it, they're looking through September into next year, and they may need to continue cuts in their cooperation. And I think they see this as sort of shoring up poor compliance notoriously by Iraq and by Nigeria and a few others, because they're batting down the hatches, if you will, for a long voyage, for the long haul. So this is looking forward to the next 2 years and realizing they may not be out of this quickly, and they need to get Iraq especially out of the habit of failing to comply. You know, initial estimates, we don't have full data, is Iraq only complied by about half with the 1.1 million barrel a day cut it was supposed to make. So they're going to, now that they sort of agreed amongst themselves on the extension, they're going to turn and bring the laggards into line.
So, Bob, obviously Nigeria and Iraq were almost put on display at the news conferences a couple of times to sort of almost like shame them into compliance. That hasn't worked. What is my risk? And by the way, as a day ahead of myself, as you say, it is tomorrow. What is my risk of another spectacular implosion, as we saw in Vienna a couple of months ago, versus a constructive, extended outcome?
I think the risk of a repeat of Black April after the March collapse is very low. I don't think Russia, Mr. Putin, wants to touch that hot stove again. And I certainly don't think the Saudis want to go back to where they were in April, both in terms of prices and political heat in Washington. No, I think odds are very low of a free-for-all. Again, Russia and Saudi Arabia are aligned. If they fail to agree on a mechanism to bring Iraq and Nigeria into line, they will likely default to the current deal, which does have the cuts tapering from 9.7 to 7.7 million barrels a day in July. So Saudi Arabia will also, I think, in any case, probably end its extra effort, the extra million barrels a day that it did for June. So, you know, Saudi Arabia would go to 8.9, almost 9 million barrels a day, and Russia would go up to the same amount. So that's the base case. You still have cuts in place, but you don't get that extra extension. Now, if we get that, let's call it mediocre agreement, I think oil prices will sell off. The market is looking for an extension and some incremental restraint. But I think the odds of a falling out and a reversion to all-out price war, very low now.
Bob, I was looking at some of the EIA data on diesel demand in the United States, and that's at a 21-year low. I mean, I had to look at the chart twice. And that suggests that this whole assumption that demand for fuel in the United States is going to recover very, very quickly is misguided. What is your interpretation? What is your analysis on the demand side of the equation here?
100% agree. At 2.7 million barrels a day, U.S. diesel demand is atrocious, down over 20% from year ago levels. You know, both gasoline and diesel demand were doing pretty well in the first part of May, but it's the latter part of May that it really started to fall off. In the first part of May, demand was down by about 15% year over year. Now it's over 20%. And as you say, diesel is the barometer of economic activity. I mean, folks are driving. Certainly in China, the congestion data show folks are driving more. We're still off 30, 60% in India, Europe, and the United States. But the diesel demand is on the floor, like you say, 21-year low. Inventories, if you take a look at those EIA inventory charts, it's just like a rocket heading up into space. Demand is low. Our refiners are taking in a lot of Saudi crude. That makes a lot of distillate. It's going into inventory. And I think until you start to see diesel inventories decline, stop rising and decline in the United States, I think there's going to be a big question mark over the health of the demand recovery.
Bob, what's the storage story at the moment? You heard the minister for Norway there speaking with Anne-Marie, talking about a stability coming into the market. There was no need to extend into 2021. And she talked a little bit about storage. What can you tell me from the US lock-in and storage point of view?
Well, from a storage standpoint, you know, the good news, if you will, that supports an optimistic view and the price rally is Cushing. We came close to record highs. We didn't get to tank tops. And we're down to the low 50 million barrel a day in Cushing. So Cushing has been drawing. Crude inventories have stopped rising and starting to come off. That, I guess, is the good news. Now, we are just starting to see now huge imports in the Gulf, reflecting the offloading of that flotilla of Saudi oil that was loaded in March and April and has now arrived. So that's just arriving. You have 1.6 million barrels a day. So we'll see what happens with inventories as that arrives. That could lead to some increase in inventories. But for now, the crude inventory picture is cleaning up. But the product picture is not. Gasoline stocks also rose by larger than folks expected this week. As we talked about, distillate stocks are still high and rising, approaching record levels. And so products are telling us we're not out of the woods. Crude in the United States, Cushing is telling us we've avoided the worst.